Hi, good afternoon, everyone. Welcome to our August Traders Talk. Hi, I'm your speaker for today. My name is Elki, and welcome back to our sections for on the Monday. All right, okay, the first Monday of the month. Okay, so very fast. Here we are in the month of August, and it's just another 4 months before we end the year 2025. Yeah, I do understand that it's not an easy year this year. Okay, things has been volatile and uncertain, and there are a lot of happenings this year. But we still have another 4 months to go. So hopefully, in the remaining 4 months, we're able to do better. Okay, and also see even improvement in our performance. Okay, yeah. All right. Okay. So for today's talk, okay, for today's talks, we're gonna focus a little bit on the trade tariff that's recently been finalized. Okay, and also August, we know that is the usual earnings intensive month. Okay, so we're gonna touch a little bit on that. And other than that, for this month, the focus will there's not too many economic data coming out. Okay, so yeah, that will be the main two topic that we're gonna look into for today, and hopefully by the end of the section today, you guys can have a better understanding on how this the 19% tariff affects us, and also this new tariff that implemented by the US affecting the global. Okay, and also where are some of the opportunity that we might able to find uh, in the month of August. All right, okay, so welcome to our sections today for our August monthly traders talks, and I'm your speaker for today. My name is Elki. Okay, yeah, so like I said, today we're gonna focus on these few topics, and yeah, let's start with the review of the month of July. Okay, so for those who have been attended to these sections, okay, consistently, okay, you know that for every session we're gonna unveil and also share with you, you guys, the seasonal charts, the schedule calendar of what are the likelihood of gonna happen to the sectors to our index, okay, for the month. Okay, so for last month's July's trader stocks, okay, this is the table, the seasonal table for the month of July. And during our last section, we have been talking about like okay, July is it's likely to be a positive month, and there are so many sectors, um so many sectors areas that we can look into. Okay, and but of course we do also I remember we do also highlighted that healthcare, although that among all of them it posted 14.3% gains over the past 5 to 24 years average. Okay, for healthcare I remember it's just 5 years average. So this data it could be omitted because it was affected and lifted during the performance during the COVID year. Okay. Other than that, the other sectors reading is pretty much fair and also more accurate lah, in that sense. Okay. Yeah. So I also during our last talk we also mentioned and highlight about the 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 sector for technology is it should be one of our main focus for the month of July, because technology has been seasonally performing well in the month of July. Okay, so so since right now the month of the July has ended, so let's look at how's actually this year July been performing. Okay, and whether does it did it match with what we were discussing during early July. All right. Okay. So if we look into the sector performance for the month of July this year, okay, we can see that the outperformance, they are like constructions. Okay. Yeah, constructions. Construction is one of the sector that been highlighted in the seasonal table, okay, just now. Okay, yeah, technology is in there, and technology index it was up 2.88% for this for the month of July this year. Okay, other than that, we have REITs also performing really well. Okay, up for more than 4%. Okay, and surprisingly, healthcare, despite that it was shown that with such high return for the past 5 years, healthcare wasn't performing really well this year, and also financial services. Okay, so I will personally, I would see that why healthcare and financial services it wasn't performing that well this year. One of the reason is healthcare. It was tracked by the glove counters, which consider part of the healthcare equipment. Okay, there were worries about that. Remember during early month of in July, instead of keeping our tariff rate, US tariff, as 24%, it was increased to 25%. And as the deadline coming during the end of July, and there was no revision at that time, there were worries about that. If this rate gonna keep at 25%, then our glove companies are losing the edge to compete. And even at this moment, at current juncture, they're already facing a stiff competitiveness from Chinese glove, Thailand, okay, and they have been struggling. Okay, so if that really come true, stick with the 25%, they will, the worries are there that their business will gonna go down into the drill. Okay, so that's affected the outlook of the glove counters, and hence we are seeing glove has been dragging down the healthcare, and has been spiraling down for the share price. Okay, as for the banks, yeah, the banks, we know that we had the first rate cut from Bank Negara Malaysia in 5 years. Yeah, so that could be some portfolio adjustments on banking stocks, since we are getting the first rate cut in 5 years. Okay, other than that, we can see that constructions wise, technology wise, that has been performing well, with there were more projects, more infrastructures being announced, like the approval for the MRT3 and so on. And then we also have Nasdaq's tech stocks has been reported historical high, and also more supportive measures for national semiconductors. The plans announced during the Asian Semiconductor Summit. Okay, so all these are things that actually lift up and also keep some of these sectors has been actively traded in the month of July. So in summary, I would say that the month of July is actually quite kind and quite a good month to trade and trade out of it. Okay, so if you have been following and traded and make profit out of this, then yeah, congratulations. Okay, but how about the month of August? Okay, should we continue to keep in such a trading style, or the focus in the same sector, or what? Okay, so later during this section, I'm going to share with you my view, my idea, and hopefully from there we're able to come up with a clearer idea on how to go about. Okay, so if we look into the construction index, so we can see construction index, it was one of the top performer for the month of July. Okay, we can see for the month of July, it has been steadily going higher. Okay, but if we look into the index chart itself, we can see that, okay, we can see that the index is actually coming very near into the 2017 and 2018 high, which is the resistance area at this point. Okay, and we also can see that during early of this year, as we challenged the resistance area, we had quite a sharp drop. Okay, that also come in line with Trump's coming into places, and some of these plans were unveiled. Okay, so there were starting the selling, and eventually we took almost like 4 months to recover from the bottom and all the way back to this same area again. Okay, so whether are we able to just break through this resistance area? So far, I would say that the chances might not be as high as we are expecting. Okay, although we are seeing a lot of all these order books, all these order books, all these progressive building are being shown, are being reflected. Okay, but I would say that market actually has prices some of all this. Okay, yeah, market always has been efficient and they have been pricing in. So in order for us to break through this key resistance area, we really need something that is more convincing, maybe a more stable outlook, or more convincing the foreign inflow for the DC or what's, yeah, then that could be a boost for the construction stocks or index to break through and trade into a new and higher space. Okay. As for REITs, we can see that REITs also has been trading steadily higher in the month of July. Okay, I would say that one of the main factor that contributing to this is we had our rate cuts. Okay, so we know that with the rate cuts, there would be some interest to go into some of these other assets, other investment tools that provide a better investment returns, and REITs, it could be one of them. Okay, yeah, because with a lower rate, that's the FD rate, all this thing has been lower, and yeah, some of the funds are switching into REITs, and that prop up the REITs index. Okay, yeah, and also we know that REITs is also an option for some of the long-term investor going into preserve the value of their money while avoiding some of the risks in the markets. Yeah. Okay. And another one that has been performing is industrial products. Okay. Although very similarly, we are seeing some of the divergence for industrial products, the divergence, the bearish divergence for the stochastic. Okay. But if we look into MACD momentum wise, the momentum actually is still maintaining on the MACD momentum. Okay, so for industrial products index wise, we are seeing it's forming into a potential uptrend, although we are yet to see a very strong gains over here. We might see in during early of August, it might retest the trend line, and really we want to focus on the 160 levels of, okay, the index points. Okay, if we're able to break through these 160 levels, then we should see in industrial products index to trade back to maybe 180 or even 200 levels. Okay, and some of the industrial products, some of the companies in this index, in this industry, they have been really performing well, and they have been rebounding. For example, like Petronas Chemical that has been doing rebounding from the low of 3 ringgits and tested back to 4 ringgit and been going on sideways. It could be coming near to the end of its downward cycle. Okay, so we might really want to keep an eye on some of these, like Malaysian cements that also has been making quite a strong breakout recently. Okay, yeah. So other than that, some of the E&E or EMS counters like VS, like National Gate, they have been making quite some positive movement as well. So industrial products, I would say that given the tech come in line with the technical outlook, I would say that these sectors might still worth to look at it. Okay, very closely for this month. All right. Okay. But of course, if we if continue to stall and unable to break 160, then we might see a prolonged sideways movement while the market is waiting for a clearer directions. All right. Okay. Yeah. So, but no doubt, if the trading interest pick up, some of them they reported good results, then that could be a boost and also a reason for the share price to go higher. And for this month, this is something that guys might want to catch on it. After looking at some of these sectors, okay, how about the the Hey guys, sorry for the technical issues. Okay, let me share my screen real quick. All right. Okay. Yep. Okay. All right. Okay. Is it all good? Okay. If you can see my screen clearly, then just let me know. Okay, on the chat. Okay. Then I will carry on with the outlook for the small cap. Okay, FBM small cap. Okay. Yeah. Appreciate that. All right. Okay. So if we look into FBM small cap wise, similarly, FBM small cap is trading on a downtrend. Okay. But we can see that it has been trading on a sideway. Okay, sideway, and then testing towards the trend lines. All right. Okay. So yeah, very similar to FBM KLCI for the month of August, we might really want to be aware that for a potential weakness that it could be happens as the index is approaching trend lines, and yeah, and also due to some other reason which I'm gonna share later. Okay, if we besides the index, if we look into the crude palm oil wise, the palm has been rebounding from May and all the way until like July. Okay, it has been making quite a good rebound from 3,800 levels to 4,400 levels, which is appears to one of the key resistance level, and start retracing end of July. Okay, yeah. So at this point, as long the CPO prices able to hold above 4,000 levels, I would say that the outlook for the CPO, it could be remain strong and positive. Okay, but seasonally, August and September, they have been the potentially the production peak levels, whereby we could see more production numbers coming in. Okay, and if the demand doesn't pick up, then we might see a weakness, a short-term weakness in the CPO price. All right. Okay. Another commodities for this the crude oil. Okay, the Brent. Okay, we can see the Brent is trading with 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 the MECD near zero, and also the LMA has the moving average has been flat. Okay, so for crude oil wise, the outlook is pretty much uncertain at this point. Okay, yeah. The volatility right over here is the Israel-Iran's war creating the turbulence in the markets, in the oil price. Okay, as of right now, it's actually like a tug of war between whether with this new tariff from US, is it gonna reduce the global demand for the oil, with slowing economy doing. Okay, meanwhile, also OPEC Plus has been announced they are, instead of cutting the number of production, they are actually increasing, announced on Friday. Sorry, not Friday, over the weekend. Okay, so that actually keep some of the upsides, cap the upside of the Brent crude oil. Okay, so from there we might see energy stocks, the crude oil remains the upside remain limited at this point. Okay, yeah. So that's about the broader view of the markets. Okay, we can see that the plantation has been doing well, and right now for these 2 months it might go into a retracement. Brent, the crude oil, has been going on sideway. FBM KLCI, small cap, small cap index, they might face some roadblock and some resistance in the month. Okay, so I would say pretty much this month, the month of August, it could be a month that is more suitable for profit taking, and also get out some of the positions, reduce some of the exposure after we had quite a good run in the month of July. Okay, yeah, and not to say that taking profit and a weak month is bad. Okay, because if the share price never come down, then how can we buy the share at a lower price, right? Okay, but more importantly is how we understand the ongoing development and what are the correct stocks that we should look into. Okay, yeah, so for the impacts of this US tariff, we do understand that 3 days ago, okay, US have announced that this 19% tariff, the US tariff that gonna be imposed on Malaysia exports, and it's gonna be enforced on 8th of August, which is this Friday. Okay, and this is a rate that is lower than previously announced 25%. Okay, I would say that since that this is something that inevitable, rather instead of getting at a higher rates, a 19% tariff is actually considered is more acceptable. Okay, whereby we are slightly lower than Vietnam. Okay, we are on par with Indonesia, Thailand, all this. So in Southeast Asia wide, we are still able to keep our competitive edge and continue to fight for the business. Okay. Meanwhile, some of our exports products like semiconductors, pharmaceuticals products, they are exempted from tariff. Okay, yeah. But if we look into what are the key sectors that affected, still there are quite a number of sectors that will be facing the difficulties. Okay, whereby one of them is glove that mentioned earlier. Okay, other than that, furniture is one of those um, that gonna face tailwinds. Okay, also they're gonna face difficulty to run it. Okay, and of course the palm oil based products, E&E machinery components, and also solar panels. Okay, so what are the impact that actually could all this bring us? Okay, so for some of these sectors, some of these companies, they might face a heightened competitiveness whereby, um, like for example, furniture. Some of them, some of these furniture companies, they really losing edge of compete in the cost base, pricing base with some of the companies production from Vietnam or from China. Okay, and if if okay, if China gonna stick with a higher tariff for furniture companies wise, then they might have able to stand a chance to fight. But if the US tariff for China company on furniture also remains low, then still we gonna face this competitiveness, and we definitely our furniture company definitely have to find the their own edge to get the client, get the business. Okay, yeah. But for current situations, they're gonna face the very first thing that they're gonna face is they're gonna face a lower profit margin, whereby this additional 19% of cost. Okay, that's 90% of cost. That's the US importers. If they choose to import from Malaysia, they need to face this additional 19%. Is this 19% gonna absorb by both party? Okay, or it gonna be passed on to the end consumer? Okay, which can contribute to the inflation. Okay, or our manufacturer or exporting companies gonna say that, oh, okay, so right now I still want your business. I'm not. I understand that you have to pay for this 90%, so I'm gonna cut my price. I'm gonna absorb some of this cost, which that gonna lead into lower profit margin as well. So in the near term, okay, I believe that it's very hard for us to pass on the cost, okay, in such a quick way, okay. Hence, a lower profit margin is likely to be seen on all these sectors, all these companies that's being affected, okay. Yeah, so we could definitely see that it's gonna be a more challenging environment for all these manufacturing company, all this exporting company, which we might really don't want to get involved at this timelines. Okay, and that's just on the impact on tariff. We haven't been talk about what if US and China, their trade talks, they still unable to come into an agreement. Okay, an agreement, and eventually some of these exports, some of these Chinese products imports, okay, has to actually go to other places, and Southeast Asia, Europe could be some of this destination for all these products. Okay, yeah. So if we are seeing more and more US Chinese goods coming into Malaysia at a much lower price, then how about can our manufacturing companies, are they able to compete and survive? Okay, so these are some of the questions that it might arise, and we might really want to be careful when if we are deciding to make investment into some of this manufacturing company while their share price has been going lower. All right, okay, so how should we go about with it? Okay, then we might really want to choose those manufacturing company or some of those that's able to offer services with a unique expertise, okay, or knowledge, okay, which that could help them to survive in in current situations, okay, or they able to provide a very highly customized solution for their clients, okay, whereby it's too costly for the business to change or to switch to another company, another business in a very short time. Okay, yeah. So if we really want to go into some of the manufacturing company, these are some of the companies and services that we have to focus on, and these are the companies that might stand a chance to survive. Okay, other than that, if we not being stubborn, or not to say stubborn, I mean like special preference on manufacturing companies, we might want to look into review our portfolio and also switch some of our funds, our investment into some products and some companies that actually produce that meets domestic demand. For example, like constructions, building materials that actually meeting the demands from the data center demands, the infrastructure demands that has been ongoing. And we can see that from the 13 Malaysian plan that announced last week, we also has been confirmed that there will be continuous investment and also demand for the mega infrastructure. Okay, so these are some of the other sector that we might want to go into. Other constructions, we also know that we are trying to go for digitalization is one of the major directions that our government is looking at it. So is there any digital services or companies that actually can come in line with these directions? Okay, yeah. Um, besides these two, I would say that defensive sector is one of the area that we can go into. Okay, but when we talk about defensive sectors, it not necessarily must be like, oh, we have to talk about healthcare, that we must go for glove, all this. But really, defensive counters like probably like hospital, okay, like the medical services, okay, which one of which I recently read through an article talking about, we also trying to push Malaysia to be one of the destination for medical tourists. Okay, yeah. So tourism, medical tourists. Some of this could be one of the area that we might want to look into as well, which in line with our government's goal for the next few years. Okay, but of course, the demand for the power, renewable energies, tenaga, and solar EPCC, all these things are definitely some of the sectors, some of the companies that we can look into and put into part of our strategy at this juncture of time. All right, okay, yeah. So that would be some of the way that we able to put on as our strategy to counter what we are seeing, the prolonged impact from this tariff thing. Okay, yeah. So moving on for the rest of the month in August, we are not seeing such a huge data or events coming up, except for on 12th August, whereby US and China, we're gonna see whether there's any extensions being announced on the US China trade post, the tariff post that gonna expire on 12th August, and on end of the month on for the Jackson Hole symposium, whereby Powell gonna give a speech, and that we might able to hear some of the updates about the is there any change of thoughts on the rate cuts. Okay, especially we are seeing much lower job data being announced on last Friday, and also the revisions. Okay, so that will be the first talk that we able to get updates on. Is there any changes in the view from the Feds on the interest rate cuts? Okay. The next section we will be talking explore some of the potential opportunities in for the August earnings. Okay, yeah. So for August, some of the potential sectors that I'm looking at is we will still stick with semiconductors. Okay, we can see some of the semicon companies, they have been reported improving results Q on Q, and if we look into if you check with SIA uh, Semiconductor Associations, okay, we can see that global semiconductor sales has been improving quarter on quarter and year on year for the second quarter of the year. Okay, and also we can take some hint from like TSMC, their profit has been surging. We are seeing a high demand from the AI chips. So all these are the signals that telling us that semiconductor is likely to continue to report strong earnings, improving earnings for this quarter. Okay. Similarly, like we just now we saw for since the month of May until all the way until July, pump price, CPO price has been trending higher, rebounding from 3,600 to 4,400. So plantations company are likely to report strong earnings as well, positive earnings, at least improving earnings. Okay, so plantation counter, if you're willing to buy and hold, and withstand the potential retracement on potential pullback or potential sideways movement, okay, due to the retracement in the CPO price for the August and this September, then plantation company could be something that you might want to look into as well. Okay, yeah. Then following that, constructions with the progressive works done and the building all this thing, then we should see constructions and also the related one could be continue to report some of the good earnings. Okay, yeah. And last but not least, the ringgit beneficiaries that I have been highlighting and I've been talking about with it. Okay, so we can see that the ringgit has strengthened nearly 7% in the month of July to May. Okay, sorry, April to May, and for the performance sales, all this performance company performance in April all the way until July. Sorry, from April until July, it's gonna be reported in this coming QR. Okay, so we should see a clearer impact that being shown in this month's earnings. Okay, whereby some of these some of this company that benefited from lower raw material prices, products. Okay, they able to have a better profit margin. They have a higher profits, and also some of those that have US denominated borrowings, they might able to save some on the their interest. Okay, yeah. So if we look into in last year charts, okay, 2024 until from August all the way until October, we can see that there is a very strong downtrend as well. And if we look into one of the article that's reported in early December, okay, we can see that the same thing is poised to happen. Okay, yeah. So it's during with the strengthening in the ringgit during that time, during the third quarter in 2024. Okay, so some of the companies, they actually have reported and also benefited from this ringgit strength. Okay, yeah. But of course, there will be some of the companies that we might want to be careful and also be aware of, whereby they might report some of the forex losses like PCAM, like YTL. Okay, other than that, some of the companies like I've been mentioning, like Capital A, like TNB or Asiata, or this, they could be benefited from it. Okay, yeah. So last but not least, coming to our last section for today's sections, okay, we'll be on the usual seasonality and the QR. Okay, so for during our July sections, okay, we actually have put up Seaview, okay, as one of the company that gonna report their earnings. Okay, so basically this table that we are having here is actually a tool that's a tool that available in our platform, in our Pac Online platform, whereby we actually have counters that have been posting continuous growth for the past 5 quarters. Okay, yeah. So for them, so if this company, they have been posting earnings and growth for the past 5 quarters, what is what are the chances that they're gonna continue to grow and also able to perform well for the next quarter. The chances are high, right? Okay, so I think that is quite sensible to use some of these counters in this list to continue to trade on it and also look for the opportunity from this list. Okay, but unfortunately for this CBU, they reported their earnings in July, and although they have been growing and their profits has been increasing. Okay, we can see that the earnings wasn't the revenue wasn't that consistent. Okay, it's still going higher, but wasn't that consistent. But even though their profits has been steadily going higher. So for the last quarter in July, they actually reported a lower revenue and also lower profits as well. Okay, and the share price has been coming lower. Okay, yeah. So as for this month, okay, we can see that out of the 11th in the list, we actually have 10th, which gonna set to report in the month of August. So even though we have these two available in our Pac Online, but of course we're not gonna just do no-brainer buying. Okay, going through some of these counters, there are a few counters, 4 counters, they are trading on uptrends, and it might more suitable for some of the trend traders, short-term traders to look into some of these counters company to trade in the anticipation of potentially a continuous well performing in their earnings. Okay, so the very first one will be the Southern Cable. Okay, we can see that Southern Cable has been trading higher since the month of April, and we can see it's just nicely well along with the 20 days moving average line and trading higher from there. Okay, with the demand on the DC and the cabling, all this, Southern Cable is likely to continue to post a strong earnings and continue to trade higher. Okay, but bear in mind that the share price has been going up from almost double since April, and also volume has been seeming to coming slightly lower. Okay, so if you're trading Southern Cable, you might don't want to be too greedy, and you might want to see money take money to do a fast trades. Otherwise, you can consider the next one, which is MN Holding. Okay, MN Holding, we can see that it just break out from the high somewhere around 1.30 ringgit in June. Okay, currently it's just like from 1.30 ringgit, just 30 cents higher, and it's also hard trending above the 20 days moving average with some of the pullback recently. Okay, so if you're able to hold well and continue make buying maybe like MACD cut up trading signal, then you might want to do short-term trades on it. Okay, the last two will be Percat and SolarVest, which is right on the right on our government's renewable energy initiative. Okay, the increasing demand of the solar EPCC. Okay, so for Percat wise, we can see that Percat has been the characteristic for Percat has been really stable and has been steadily moving higher. So with the pullback and currently hold on along with the 20 days move reach, the risk and reward ratio actually quite justifiable. Okay, so if you want to trade, you might want to for Percat, you might just go in and buy and put a stop loss somewhere around like the recent low. Okay, as your stop loss, meanwhile trying to ride it for a potential strong results to be released by the end of this month. Okay, SolarVest wise, we can see that SolarVest has been making really a strong move. Okay, strong move since end of June. Okay, and it has been facing some of the resistance near the 2.50 ringgit. So given that the MACD is sliding lower, okay, we might see that SolarVest to trade more into a sideway, trying to stabilize in between 2.30 ringgit to 2.50 ringgit area before we can see a further breakout above 2.50 ringgit. Okay, so for those who are interested in SolarVest, you either trade on momentum if it really break 2.50 ringgit area, or otherwise you might want to be a little bit patient and wait for the build up around this area before we can see further breakouts. Okay, so if you want to know more about the tools that we have in our Pac Online, okay, in this one we have webinars which gonna share some of these power tools that we have in our platform. So do feel free to join us on 11 August, or if you want to know how like the OPL cuts in last month, okay, in July, okay, affect our banks and whether it put our banks in cheaper price right now. We have another talks on 18 August, which just feel free to join us to know a little bit more about it. Okay, yeah. So last but not least, okay, for the month of August, okay, for the month of August, we can see that um, it's kind of like mixed. It's kind of like mixed whereby most of them they are a little bit weaker. Okay, though especially those that have been performing in the month of July. Okay, we can see that in the month of July, constructions, technology, these are the performance, the top performer in the month of July, and of course small cap as well. So when it comes to August, August is really like what I was sharing with you guys is like a profit taking months from July performance. Meanwhile, some of the earnings kick in. Okay, so you might want to really look into secure some of and lock in some of your profits on like construction stocks, on technology stocks, okay, and just leave some of your long-term investment to continue to run to right through the up and downs, okay. For short-term why you might really want to take some of this. Meanwhile, utilities and energies, with the uncertain outlook on the oil energy, we might want to less focus, but maybe it's still on utilities, given that fundamentally the demand for the power and renewable energy, they will still be there. It's in line with the government initiative. So utilities might be something that we want to focus more in the month of August. Okay. Yep. All right. Okay. So that will be the idea and the direction for the month of August. Okay. And I hope that's what I have been sharing with you guys today can help you guys to make a better decision and also perform better for the month of August. Okay, so if you have any questions, feel free to PM us, feel free to contact us through WhatsApp or drop us a message in some of the social media. Okay, and our dealers will try to contact you as soon as possible. Okay, otherwise I'm gonna see you next month. Okay, for September Trader Stock. All right, thank you very much and have a good day. All right, good luck, everyone.